Trading. It sounds easy, but in reality, it's just as difficult. Understanding the market's moves might be easy, but understanding the moves of your own mind is the biggest challenge. Have you ever thought, the strategy was right, so why did the loss happen? The real battle isn't outside, it's inside. And The Disciplined Trader is the book to win that very battle. This isn't just a trading book. It shows a path to a mental war where emotions, beliefs, and discipline change your real game. So, let's dive deep into this book. Chapter 1. The Road to Success. Have you ever felt like you did everything right? Market analysis, strategy, timing, everything. But still, the result wasn't what you expected. You were sitting in front of the screen, fingers ready, the plan was set. But as soon as you took the trade, you panicked. Fear set in. A small market movement shattered your entire confidence. This is where a trader's real journey begins, the road to success. But this success doesn't come from charts, indicators, or news. It comes from conquering the mind. This is a story from when a boy was new to the stock market. He took his first trade of 10,000 rupees. He thought the risk was small, just to get some experience. But as soon as the trade went into loss, his heartbeat increased. His hands started shaking. It was just a loss of 10,000. It's spec. It's store. But the fear was as if he would lose everything. That day he questioned himself. Am I even made for this world? And this is the question thousands of traders ask themselves every day. The path to success is not a straight road. It's a path where at every step we confront ourselves. What we think, what we believe, what we feel, all of this silently controls our decisions. We think we have come to understand the market, but in reality, the market forces us to understand ourselves. Imagine a boxer who enters the ring every time, knowing the opponent will throw punches. But he isn't afraid because he knows fear is not his weakness, but his trainer. Similarly, when a trader stops fearing loss, he learns to win. But this shift doesn't happen in a day. Many times, people keep changing strategies. They watch YouTube videos and other one. They apply new indicators, but still, the result doesn't change. Why? Because the root problem is not outside, it's inside. There is an invisible wall inside us. It contains our old beliefs, childhood conditioning, and past failures. And when we trade, all of this stands in front of us like a wall. Every small market volatility hits that wall and shakes our thinking. The path to success begins with self-awareness. Once a professional trader said, "Trading is not about predicting the market. It's about controlling yourself when the market does something unexpected." And this is where most people give up. They think, maybe this is not in my control. But actually, they just haven't learned to understand their emotions. This chapter brings forth this raw reality of why people sabotage themselves and how the right mindset becomes the biggest edge in trading. This redder in the game to speed. This redder in the classed, in our Bayard dest. Think, if you could remove your fear, doubt, and impulsiveness, wouldn't all your decisions be clearer than before? The path to success is not easy, but it is straight. If you learn to listen to and then control the noise within you, this book takes you to the first step on that path. It begins with the understanding that it's not a battle with the market, it's a war with oneself, and whoever conquers themselves becomes the real trader. Chapter 2. Some perspectives on probability. Suppose you have a coin in your hand. You flip it. Will it be heads or tails? The chance for both is 50-50. But now think, if it comes up tails 3 times in a row, what will happen the 4th time? Most people will say, it must be heads now. Why? Because our brain tries to find patterns even in random things. And this becomes our biggest mistake in trading. The market is not a sure street. It is an open ocean where every wave is unpredictable. But as humans, we want certainty. We want that every time we take a trade, the market should behave exactly as we thought. But when it doesn't, we break. This is where the real understanding of probability begins. Listen to a story. There was a trader who always traded with high conviction. He felt his analysis was perfect. We force of a sake, and every time taking a trade was a test of his confidence. But when he had 4 consecutive losses before the 5th trade, fear filled him. He started thinking, what if there's a loss this time too? His hands started shaking, his heart rate increased. And guess what? That day, he made his biggest loss. Why? Because he had mistaken probability for prediction. Probability means the possibility of an outcome, no T, a guarantee. But in trading, our brain takes it in the exact reverse. We think if we have done everything right, the result should also be the same. But the market is like a casino, where the edge is important, not individual trades. Imagine you are a casino owner. You have a game where out of every 100 times, you win 55 times, and the customer 45 times. Now, if a player comes and wins 5 times in a row, will you be afraid? As Dom, no, because you know in the long run, you will win. A professional trader does the same. He doesn't care if one trade is won or lost, because he knows his edge will keep him profitable in the long term. But a new trader attaches his ego to every trade. And when the trade goes into loss, he starts considering himself a failure. The biggest challenge in trading is accepting uncertainty. Our whole life teaches us certainty. Pass the exam, move to the next class, get a job, get a salary, work hard, get results. But trading is a place where you can lose even after doing everything right, and win even after making a mistake. Therefore, when you understand probability, you don't have expectations from the market. You just follow the process. This mindset gives you emotional stability. Once an experienced trader was asked, "How do you stay so confident?" He said, "Because I don't expect to be right. I expect to manage whatever comes." Here, success doesn't mean being right, but being able to think according to the opportunity. Probability teaches us that there is uncertainty in every outcome, but handling that uncertainty emotionally is the skill. And no strategy or indicator can teach this skill. It comes when you accept that loss is also a part of trading. Another real example. There was a girl who did intraday trading. One day she had 3 losses, and before the 4th trade, her mind was thinking only one thing. Now, I have to win. She increased her position size. Result, huge loss. For her, that became a lesson that the desire to win never changes probability. Understanding probability means giving yourself permission to be wrong, and this permission gives you emotional freedom. So next time you take a trade, ask yourself, did I come here to be right or to be disciplined? Chapter 3. The Dynamics of Perception. Show the same chart to 2 traders. One will say the market will go up from here. The other will say, no, it's going to fall. Strange, isn't it? The market is the same, the data is the same, the candles are the same, but both have different perceptions. Why? Because we don't see the world as it is. We see it as we are. In trading, perception works like an invisible filter. It is made from our past experiences, beliefs, and emotions. This very filter decides how we interpret the market. Now think, If a trader had a big loss in a specific pattern last time, then the next time the same pattern appears on the chart, his subconscious fear will activate. He won't see logic, he'll only see danger. But another trader who made a profit in that same pattern will see that setup as a golden opportunity, meaning our perspective is more powerful than the chart. Let me tell you a story. There was a boy. Let's call him Rahul. He learned from a webinar that the head and shoulders pattern is a bearish signal. The next day, he saw that pattern, and without thinking, he took a shot. But the market went the opposite way, and he made a big loss. He checked the analysis, everything was right. So where was the mistake? The mistake was in perception. The pattern was half incomplete. There was no volume confirmation. But his mind only saw what it wanted to see. Our brain wants certainty, and when it feels that a pattern might have an unknown result, it ignores all other signals. This is called selective perception, meaning we only accept things that match our existing beliefs. Other things either aren't seen, or if seen, don't make sense. This is the most dangerous trap in trading. Many times people say, "The market cheated me." But actually, the market never cheats. Perception does. The perspective we are viewing it from blinds us. Once a trader told that he used both MACD and RSI for confirmation, but the day both indicators were giving opposite signals, he ignored the RSI because MACD was matching his belief. Result: big loss. Perception is not limited to just patterns or indicators. It also controls our emotions. When we are in fear, every move seems like a threat. When we are in greed, every move seems like an opportunity. And this shifting perception leads us astray from our strategy. Controlling perception is not easy. It is a mix of our experiences, from childhood to every small and big event. If we were punished repeatedly for being wrong in childhood, then as traders we start seeing loss. Another real-life example. There was a girl who always exited at small profits. She had a belief inside: book profits early or else everything will be gone. One day, a perfect trend came in front of her, but she exited early. Later, she saw the market had touched her projected target. She was shattered. But the next time, she did the same thing again. Why? Because in her perception, the market was someone who would snatch things away. Until perception changes, changing strategy does nothing. Shifting perception is a mental exercise. When you ask yourself after every trade, what I saw, was it really on the chart, or did my brain give it meaning? Then you take a step forward. To win in trading, the first necessary thing is to see the truth as it is, not with too much fear, not with too much hope. Because when perception is clear, then the decision is pure. We have 2. Chapter 4. The impact of beliefs on trading. Suppose there is a voice inside you that says, every time before taking a trade, there shouldn't be a loss this time. And you take the trade, but the market goes against you. In anger, you remove the stop loss, and then when the loss increases, you panic and cut the trade. Later you think, why did I do that? Because the decision wasn't made by you, it was made by your belief system. Beliefs are those invisible threads that control our thoughts, emotions, and every trade. And the biggest thing is that we often don't even know what invisible rules we are operating on. Once a boy came into trading. His name was Arjun. Educated, smart, his strategy was solid too. But every time the market went against him, he would freeze, wouldn't cut the loss, and small losses would become big. One day I asked him, "Why don't you cut losses?" He said, "Because since childhood, I've been taught that giving up is wrong. This is where the whole game is." The belief that was taught to us in childhood, don't accept defeat, that same belief was drowning him in trading. He never learned that in trading, accepting a loss is not defeat, it is wisdom. Beliefs are not always logical, they are emotional, and often born from old pain, fear, or experiences. Many traders feel, if I take a loss, then I am weak. This belief doesn't make them strong, rather it pushes them towards emotional decision-making. Once there was a girl who was a very cautious trader. She never took a trade without double confirmation, yet her trades often missed. When asked what she was afraid of, she said, "I cannot afford to make a mistake." We have too. Why? Because she had an old belief inside. Making a mistake means I am not capable. Until we recognize our belief system, we remain trapped in the net that our own mind has created. In trading, belief is the biggest invisible enemy, and if it is a wrong belief, it can make even every right strategy fail. Think, if you have a belief inside that the market is unpredictable and I am never safe, then you will trade in fear all the time. Fear will force you to book profits early and teach you to stay in a loss, hoping for a reversal. For a trader to succeed, he first has to look at his belief system in the mirror. Now, a question. Can beliefs be changed? Yes, but it requires awareness. When you recognize that a belief of yours is stopping you from moving forward, then you can challenge it. Like, does every loss mean failure? Number, does every mistake define my worth? Absolutely not. Changing belief begins with questioning, and the biggest breakthrough happens when you understand that I am not a slave to my beliefs. I am their creator. Trading is a mental game, and beliefs are its deepest foundations. Working on strategy is easy, but changing belief is the real transformation. As long as you keep thinking like a trader bound by his beliefs, progress will be stop-start. But the day you start reprogramming your beliefs, from that day your trading also starts to shift. And that journey begins with awareness. So next time you take a trade, ask yourself, am I taking this trade from my strategy or from my old beliefs? Because in trading, success depends not just on skills, but on beliefs. Chapter 5. The Dynamics of Goals. Rahul was taught since childhood that if you want something, make a big goal for it, work hard, and don't stop until you get it. With this thinking, he started trading. His first goal was to earn 50,000 rupees every month. He planned everything in Excel. How many trades to take, how much risk to take, how many times to win. Everything was set. But in the very first week of the month, there were 2 losses, and the whole system shook. Fear, frustration, anger, everything started coming at once. Rahul suddenly changed his goal. Now just recover the losses. The next week went worse. By the end of the month, instead of his 50,000 rupee goal, he had a loss of 70,000 rupees. So the question is setting goals wrong? No. What's wrong is the way of chasing goals. The dynamics of goals in trading are different. Focusing on the outcome here doesn't give you clarity, it gives you pressure. Once a swimmer was asked, "How do you win every race?" He replied, "I don't think about winning, I think about making every stroke perfect." This same mindset is necessary in trading, because when we make the outcome, that is to say, money, our main goal, our energy gets lost in fear and expectation. We start seeing every trade as a step towards that goal. And if that step breaks, we start considering ourselves broken too. Goals will keep breaking us from the outside until they become internal. Internal goals mean focusing on discipline, mastering the strategy, recognizing your emotions, and becoming better every day. Take a real example. There was a trader named Neeraj who would sit in the market every day with the goal of earning 1,000 rupees. Sometimes it happened, sometimes it didn't. On the days it didn't, he would start taking extra trades, revenge trading, overtrading. But one day he changed his approach. He set a new goal for himself. I will follow the rules on every trade, no matter what the outcome. And within a few weeks, his performance started stabilizing. Why? Because now he had become process-driven, not outcome-driven. This is the biggest game of goals in trading. Do you consider the process as the goal or the result? If your goal is only to make money, then every loss will make you emotional. But if your goal is to stay disciplined, then every loss will make you stronger. Think, an archer focuses only on the target while shooting the arrow. If he thinks every time, "I have to win this time," his hand will shake and he will miss the mark. Trading is just like that, where the calmer the mind, the sharper the decision. Now another dilemma arises. How will motivation come without a goal? The answer is simple. There should be a goal, but it should be one that is in your control. You cannot make profit the goal because it depends on the market's behavior. But you can make discipline the goal because it depends on your behavior. In trading, only those people become consistent who consider daily discipline as the reward, not just the money. Every day when you sit in front of the screen, don't ask yourself, "How much will I earn today?" Ask, "Will I be able to stick to my rules today?" This very mindset will make you a long-term winner. A goal is like a compass, not a finish line. It gives direction, but how grounded you are at every step determines whether you will reach there or not. So next time you set a goal, set an intention, not an outcome. Success in trading is to take every action with awareness and own the process by understanding every emotion. Because the real victory is not of money, but of conquering yourself. Chapter 6. Discipline. That which isn't seen, but determines everything. There was a boy, let's call him Vivek. He found the world of trading very fascinating. Charts, green candles, fast profits. Seeing all this, he felt he could do something big too. He learned a strategy, backtested it, and jumped into the market confidently. He made a profit on the very first day and jumped with joy, felt like he had hit the jackpot. But the very next day, the same strategy started giving losses. He had taken the trade after thinking, but as soon as the candle reversed, he panicked. He removed the stop loss, hoping the market would reverse. But it didn't reverse, and the loss deepened. He couldn't sleep properly that night. Only one question was spinning in his mind. Why did I do that? When I knew the rules, why didn't I follow them? Because having knowledge and staying in discipline are two very different things. Discipline is a word that sounds small, but from within, it changes your entire life. In trading, it is your biggest strength and also your biggest weakness if you haven't understood it. Discipline doesn't just mean rule following. It means recognizing your emotions, accepting them, but not acting according to them. The market challenges you every second. Come on, break the rule just this once. Just increase the risk this time. The profit will be bigger. Just remove the stop loss once. Maybe the market will come back. And if you gamble even once, the market will teach you the price of not having discipline. Once a professional trader said, "Discipline begins where comfort ends," meaning the moment your mind says, "Let's adjust a little," that's where you have to activate discipline. This is the biggest secret to winning in trading. How long can you own your plan, especially when the market moves against you, or when you feel that maybe an exception should be made this time? Discipline is boring. It doesn't give thrill, it doesn't give excitement. It teaches you to do the same right thing again and again, whether the mind agrees or not. And this is the reason most people cannot become consistent in trading, because they want excitement, not excellence. Take another real-life example. There was a girl who did pre-market analysis every morning. She made a full plan: entry, exit, stop loss, everything. But when the time for the real trade came, emotions came in between, and she would stray from the plan. One day she made a decision: no matter what happens, I will not deviate from the plan. And in the next 3 months, she saw a consistency in trading that she hadn't seen in the past year. Why? Because she had made discipline her strength. Discipline frees you from fear, from overthinking, from regret. And this is that invisible edge that doesn't show on any chart. but it exists inside every winning trader. Discipline doesn't mean you will never make a mistake. It means you will not lose control even after a mistake. When you are in discipline, you see every trade from the perspective of a system. Not too excited, not too fearful. You stop connecting the market to your ego or identity, and only then do you become a real trader. The real test of discipline is when everything is going against you, and yet you stick to your rules. Then the market rewards you. Not immediately, but eventually. So next time you take a trade, ask yourself one question. Can I step out of my comfort zone and make the right decision? If the answer is yes, then you are among the few who can make trading an art. Because everyone has a strategy. But discipline, that is only with those who have set out to conquer not the market, but themselves. Chapter 7. Making the shift to a probabilistic mindset. Think. You are a casino owner. Every day, hundreds of people come to you to play. Some win, some lose, and some leave after cursing you. But still, you sit comfortably in your glass cabin, drinking coffee. Why? Because you know your game has an edge. You know that out of 100 times, you win 55 times. And this 55% win rate gives you crores in profit every month. Now turn to the world of trading. This same probabilistic mindset makes a trader go from ordinary to extraordinary. But most people, when they come into trading, think exactly the opposite of this mindset. They feel that if I have done everything right, then I must win. And as soon as the market moves against them, their confidence is shaken. This is where the story of changing that thinking begins, where probability takes the place of certainty. There was a boy named Samir. He had read many books, watched webinars, done backtesting. He was ready to enter the market. First trade was profit. Confidence increased. Second was a loss. Confusion increased. Third was profit again. Hope awakened. Fourth was a big loss, and a voice came from within him. Maybe I'm just not made for trading. Actually, Samir wasn't wrong. His logic was strong. He had a plan too. But his mindset was deterministic, meaning expecting the right result in exchange for every right step. Trading is not deterministic. It is probabilistic. This means you don't trade to be 100% right. You trade with this mindset that I don't know what the next trade will do, but I know that 6 out of 10 trades will be right. And when this understanding sinks completely into the heart, then you play trading like a game, not a personal battle. Once there was a girl, Ria. She felt guilty after every loss. She felt she was missing something. She needed to learn more. But when she got the clarity that losses are a part of the probabilistic model, then she made a new rule. I will not judge myself on a single trade. And just this one rule freed her psychology. Probabilistic thinking frees you from emotional burden. When you accept that every trade has the possibilities of both win and loss, then you learn to act fearlessly. Now the question arises, how to bring this mindset? For this, first you have to bring detachment from the outcome. You have to understand every trade as a part of a long series, like a series of coin tosses. What comes in one toss doesn't matter. But in 100 tosses, the pattern will be clear. Second, you have to give yourself permission that you can be wrong. And this mistake doesn't question your knowledge, but is a symbol of your professionalism. The biggest benefit of a probabilistic mindset is freedom from perfection. Now you don't have to be right every time, just consistent. The biggest illusion in trading is control. And probabilistic thinking teaches you that control is not of any outcome, but only of your own behavior. A professional trader doesn't care what will happen in the next trade. He cares whether he is sticking to the plan or not. So next time you take a trade, ask yourself, am I trying to control the result, or am I following the process? If the answer is process, then congratulations. You have entered the mindset where long-term success flourishes. The probabilistic mindset gives you clarity not just in trading, but in every decision of life. Because when you accept that life doesn't give certainty either, you learn to walk every step with calmness. And this very calmness makes a trader a master. Is Bissers. Until now, you have learned that a trader's biggest battle is not with charts, news, or indicators. That battle is within him, with his thinking, his emotions, and his old beliefs. Trading is like a mirror. It shows you every day how stable you are, how aware you are, and how disciplined you are. You saw how perception changes our reality, how beliefs silently influence our decisions, and how the right or wrong nature of goals can make or break our entire journey. And then the most important thing, how discipline and a probabilistic mindset give us a clarity where every market movement becomes just a data point, not an emotional trigger. Success in trading comes not from strategy, but from stability. If you take every trade as a win-lose battle, you will remain trapped in the emotional roller coaster. But if you see trading as a probability-based business, then every outcome becomes a part of the process, not a personal victory or defeat. The real transformation of a trader happens when he stops asking, "How much did I earn today?" and starts asking, "How disciplined was I today?" This shift in question changes everything. Because the first question's answer is not in your hands, but the second's is. This book, The Disciplined Trader, is not just a book, it is a mirror. It will show you those corners of your mind that you have been avoiding. It will force you to ask those questions that you have been running from. And if you have the courage to answer them honestly, then this book will not just change your trading, it will change your life. Because the principles written in it are not just for trading, they are for life. Discipline, awareness, controlling emotions, probabilistic thinking, these are the foundations of a successful life. And trading is just a medium to practice them. So, if you are ready to see yourself in this mirror, then this book is for you. But remember, reading it will not change anything. Implementing it will. The choice is yours. To remain an average trader lost in emotions, or to become a professional trader grounded in discipline, the market doesn't need more analysts. It needs more disciplined minds. Will you be one of them? Let me know in the comments. Thank you for watching.